Governor, thank you so much for speaking to Bloomberg. So you would have had the deciding vote given the 4-4. How close were you to be on team 50 basis points?
Well, deciding votes, I mean, yeah, we spend a lot of time as a group discussing things. It's a very interesting issue in monetary policy, at this point in time. I think it is likely that, we will raise rates again. I think it's more likely than not. I would say that, however, please, when I say that, don't overinterpret it. There are, I think, good reasons in our forecasts and our reports suggest that we will see inflation. We'll see inflation come off. We will see demand growth start to weaken, and that particularly depending on the price, on the path of energy prices, that we might see something faster and better than we expect. So there's a lot of uncertainty around. And that's that's for me is the key point in the question. For me, it was a question saying, I think it makes sense to move in a step of 25 basis points. We've then got a period of time to assess that, see what evidence comes in, and as you know, I mean, all the time we're getting evidence in, for instance, on are the supply chain blockage.
But personally, Governor, was it a close call?
For me, I am in the 25 camp because I think that it is wise to take it in steps. So the case of 50, yes, it's clear because you look at the forecast, you look at what the market path implies. But actually, for me, the 25 call was not a close call, actually. But it's really because of how to operate monetary policy in the face of uncertainty.
Did the Fed actually, push the BOE in with the conviction? I know there's a lot of talk about whether you're behind the curve, but was it really the Fed hawkishness that kind of moved you in that direction?
No, I mean, we talk a lot as central banks, as you can imagine, and as governors we talk a lot, although we don't see each other quite as much these days, we do talk a lot. And we compare, notes and compare experiences and compare situations. We make policy independently. So while we're very interested in what other central banks are doing, we don't respond to, they've done this, so we'd better do that.
Governor, the market is pricing in interest rates at 1% by May. Are they right?
Well, my view very much is we've moved by 25. We're going to now take stock. I don't have any number in my head for March or May, so we will take stock. Now, what I would say to the markets is, look, you have to form a view based on what you're observing, what you're observing in terms of the economy, just as we do.
But are they off the mark, or could they be in line with expectations?
Well, we're going to take another view in March.
Of course. Governor, your balance sheet is set to be around 220 billion smaller by the end of 2025, even before thinking, of course, about sales. So do you have an idea of where the terminal size it would be in your mind?
That's a very, very good question. And we don't, actually, in the sense that we don't have a figure. We have no real experience on this front, and we're going to have to find our way. And the reason is that clearly, I mean, we're talking about what is the sort of, in a sense, the level of the steady state level of central bank reserves in the system. Now, there are two sort of bookmarks, if you like. There's what it is today, where I would say, it's higher than the steady state. There's what it was before the financial crisis, before we started the quantitative easing path, where it was very low. And of course, it was not just very low from a monetary policy point of view. Critically, it was low from a financial stability point of view. And clearly, the system needs more reserves. We've changed liquidity regulation for banks. Banks have a greater demand for reserves on that basis. So it's clearly higher.
Yeah, but in the decision to QT, why the decision to actually dump corporates before?
Well, we're actually doing the same. We could not really do passive, the no reinvestment on the corporate book, because it's small. And the maturity of the bonds means that in a passive runoff, we'd be running it off for decades. So it wouldn't work in the same way.
Do you have a model in your mind of how much a 25 basis point cut would be equivalent in terms of QT?
No, not at all. And the reason is that I think, although QT obviously is not tested much in the market, I mean, we know little about, again, if you look at other central banks, there's little experience to go on here. What we do know is with QE is that it is, we believe, quite heavily state contingent. In other words, it has its biggest effect in times of disruption and disorder, and it has an effect, but a lesser effect in more calm times. Now, clearly, we're not going to do QT in times of massive market disruption. I mean, we've reserved the, if you like, the right to suspend it if we had to. Hope we don't, by the way.
Could we see a taper tantrum?
No, I don't think so, because I think it's very well telegraphed. People know what our maturities are. But we're going to do it in periods of calm, periods of relative calm. And I really don't envisage, the market effects being very large. But we keep that under very close watch. I would also say, because obviously the market's quite focused on the fact that we have a big impending maturity, that of course actually the supply of new gilts into the market has been less than the market was expecting because of the cash funding position. So, again, I think the market is in a pretty stable place at the moment.
Governor, what happens when interest rates are at 1.5%? What happens to unemployment?
When interest rates are at 1.5%? Well, you can see from our forecast, and that's conditioned on the market path, that there is in the central case an increase in unemployment, and it goes up in the forecast to around about 5%. So 4 or slightly below is the bottom. By the way, I hope that doesn't happen, because I hope we're more in the other path that we laid out, which has lower energy prices in it, which has a much lower rise in unemployment. But that's all to do with the fact that to bring unemployment down, we're going to have to see some weakening in demand in the economy.
Governor, thank you so much.
Thank you.